Hey everybody, Economic Ninja here. I hope you're doing well. It's raining, so hopefully you guys can hear me through the rain or maybe you won't even be able to hear it. We're going to talk about foreclosures. We're going to talk about Wells Fargo. I just did a video on Wells Fargo and how they're backing out of the mortgage industry. They're going to lay low. And what they're trying to do is give you a positive spin on things, but things are very dark in the mortgage sector, right? So what are they doing? They're only going to give mortgages to minorities and to existing customers. How does that make you feel? Well, it should make you feel normal. And the reason why is because this is a normal thing. This exact same thing happened during the pullback before the Great Recession. It's literally the broken clock is right twice. Well, guess what? We're striking 12 right now, and it's stuck on 12. And it's going to get even better. I'm going to go through some headlines, and then I'm going to end on a story about Wells Fargo, and I'm going to explain to you what's going on behind the scenes. This is why I have the real estate side hustle course. This is why I have all of these things to get you guys ready, and I'm doing these stories on the YouTube channel, both on this channel and on Real Estate Ninja. And the reason why, first off, I devoted a whole channel just to real estate. And I think there's 46,000 of you over there right now because there's so much news about the foreclosures, and you need to constantly be hearing this so you get it through your mind because you start to realize, oh, this is happening. But I don't want you jumping in yet because this is not the time. I'm going to explain that in a second, all right? Just some headlines right now. Foreclosure spike 123% in North Carolina, 149% in Raleigh. Raleigh? I always get that wrong. As pandemic moratoriums end. Foreclosures jumped 150% in Raleigh. Okay, that's the same one. That's just a different story headline. Which area of Staten Island is considered a hot spot for foreclosures? And then here we go. U.S. foreclosure activity doubles annually in 2022. Now, it's going to get a lot worse in 2023. But again, I'm just going through highlights. Foreclosures rise in Columbus, but remain below pre-pandemic levels. And there's a reason for that. I'm getting to it. Lucas County foreclosure numbers increase in 2022. Guys, those are just the headlines from the last 3 days, okay, on Google. All right, check this out. Let's jump down to Wells Fargo. This is going to be a great example of the banking crisis that is already starting, but it's going to get really big in 2023, mark my words, all right? Wells Fargo ordered to pay $3.7 billion for illegal activity, including unjust foreclosures and vehicle repossessions. Just so you know, Wells Fargo is pulling back on the foreclosure or the foreclosure business, the mortgage business, and they're making it spin. We're going to give for things to minorities. Mortgages. Now, just so you know, those are a trap. I want you to know if you are a minority and you qualify for this, it's like government assistance getting a down payment into a home. They did the exact same things at the height of the last bubble to suck you in. They get your money, and what you're doing is you're a placeholder. Now, I want to be very, very clear, and please share this with your families. Think about the mentality of the banks. You go buy a house at a high valuation. The bank gives you money. They even give you help getting in, right? They first off give you a loan, right? Because of the color of your skin, right? And I'm going to tell you right now, I'm going to give you my normal disclosure. I don't care what sex you are, what race you are, what creed you are. I don't give any crap about that. I care about your mind. I care about your heart, right? And that's what I'm trying to do is warn people. Because I wouldn't be getting into real estate right now anyway. Because it's coming down. They get you into a house. They give you government money, right, to get you in the down payments. That's taxpayer money, right? We all pay taxes somehow. And they get you into the house, and then what they do is you're paying the payment. You're just paying the payment until you can't. And the reason why you can't is because the economy starts to turn, right? Because of things that the government does, decisions that they make, policies they come out with, and because of things the Federal Reserve does, which is a private bank, all right? So now all of a sudden, you can't make your bills because you're getting laid off, right? Someone in your family got laid off, so that's less money coming in, or everybody gets laid off. And now you can't, and so they go, okay, we'll help you out for a little bit. We sit on this ordeal for 6 months, maybe a year, go back and forth with a bunch of emails. Nothing happens, we take back the house. Now check this out. That house has fallen in value, right? Well, because of fractional reserve banking, the bank is going to now sell the house. Now, under fractional reserve banking, and the rules change all the time, but imagine this. For every dollar that comes in deposits, the bank actually gets to loan out more than a dollar. So just think about that, right? It changes from now and then. But for every dollar it comes in as a deposit, the bank gets to loan out. I mean, sometimes it's $9 or $10 for every dollar it comes in deposits. So now imagine they now take your house and they sell it. They sell that house for, let's say, a couple $100,000, 300,000, even though it used to be worth 500. They can now take that 300,000 and they put that into their coffers, and they can loan out a bunch more at interest. Now, if that doesn't shock you, I know it sounds crazy. That's that 20,000 foot view of what's going on. It should. So essentially, people are used as placeholders, right? Or they can buy that, they can take the repossession of the place and then turn around with a certain law, if a law gets changed, and they can become your landlord. Or they could sell that house to a pension fund, a third party that works for a pension fund, their money, and they manage those as rentals. And then eventually, all these homes around the country that were foreclosed on become rentals. See, so what they're trying to do is they're trying to find the quote unquote dumb money at the end of the cycle to get in. The exact same thing happened in 2005, 2006, 2007. And it was sad. I was in the DMV the other day and I was talking to a lady that was so excited she'd just gotten a home. And I go, wow, and I didn't want to say anything, like, oh gosh, that's horrible timing. And I go, that's so cool. Is this your first home? You know what she said to me? She went from excited. She goes, oh my gosh, we're so excited. We got into a home. And I said, is this your first home? And she goes, no, we lost our home in the last crash. And I go, oh, when did you buy it? I already knew the answer. She goes, we bought it right at the top. You see, there's a certain mentality of people that I'm trying to, that they run around with, and they only look at things that are going up. They don't look at things that are going down in value as valuable. They only look at things going up. And what you need to realize this, and this is the biggest lesson I could give you right now. You make more money when things are going down, not when things are going up. And it says right here, federal regulators fined Wells Fargo a record $1.7 billion, a record 1.7 billion on Tuesday for widespread mismanagement over multiple years that harmed over 16 million consumer accounts. I'm about to show you something about Wells Fargo that you probably didn't know, and the second I say it, it's going to hit you like a sack of rocks. The Consumer Financial Protection Bureau said Wells Fargo's illegal activity included repeatedly misapplying loan payments, wrongfully foreclosing on homes, illegally repossessing vehicles, incorrectly assessing fees and interest and charges, surprise overdraft fees. I lived through this. Wells Fargo was one of the banks in 2008. I had to go through all these documents. I won, but I've seen banks pull this crazy stuff. I'm going to be honest with you. I do not think that Wells Fargo is pulling back their deal. Is because they got slapped on the wrist, slapped on the hand with a fine, and told you need to curtail your activities. And so they're going, we're going to curtail our activities, because they'd be out right now paying that fine and going right back out and making billions and billions more doing very dirty things. I don't think it's cool. I'm going to be honest with you. Wells Fargo, why don't you just tell the truth? The Economic Ninja is out.